Hey folks, and welcome to this presentation. Today we're going to talk about the automated currency strength reversion algorithmic trader that I'm releasing this week to long-term members at Pipnotic. When I say long-term, I mean members who have been with us for at least 6 months. Okay, so now I'm just going to run through this document, which is available in the Discord channel. It looks like this. We're going to talk a little bit about risk disclosure, the algorithm abstract, what it's doing, its strengths and weaknesses, the importance of good data, configuration, recommended configurations, and some final words. And so this is the risk disclosure. I advise you all to pause the video for a moment and read it because it's very important. The number one thing to remember here is this is not a signal provider. It's not a fully automated trading robot. This is not investment advice. The robot is a piece of software that will help you learn, it'll help you understand what currency strength is and how it can be used to trade. Okay, it is nothing more than that. It's for educational purposes, and I recommend that you use it on your demo account. If you wish to use it on your live account, you are doing so at your own discretion, and we are not responsible at all for what may happen. What I would like you to do is to switch it on, put it on a demo account, and use the trader to teach you a little bit about the behavior of price based on currency strength. And you can use this robot together with the supply and demand software, and you can find those lovely points where currency strength and supply and demand, buy and sell zones overlap. And then you'll learn, I think, in a very short period of time that these are very, very beautiful trade setups. So this is just a really nice way to help automate a lot of that process. Okay, so the algorithm abstract. Well, essentially what it's doing is it's calculating data that can be used to identify short-term divergences in currency strength. And when I say divergence, I mean that you have two currencies that are competing against one another, which is essentially what a currency pair is. It's a pair of currencies, two currencies. When one of them gets strong and the other one gets weak, continued strength on the half of the one currency and weakness on the other is not sustainable. And so a point will come where these two currencies' strengths will swap. And so what the algorithm is doing, it's identifying these extreme readings, and when it sees that, it takes a contrarian position to the dominant strength data in that moment. And when I say in that moment, it can be anywhere from the minute chart to the weekly to the monthly chart. And it trades all of them, and so you can use the robot to trade on whatever time frame that you wish. So essentially, it's identifying, it's creating a currency strength index for the 9 most traded currencies. It calculates a histogram, which is essentially a difference between the two. Then there is a quantitative model that the histogram is fed into. And then this is what is used to create signals. Okay, so you have the input, which is a histogram. It goes into this quantitative model, which calculates variances for the histogram. And when it sees the difference in the strengths of these two currencies moving up into these extreme variance levels, positive, negative variances, well, then it's using this as entry criteria, and it's doing so with a high degree of accuracy as well. Okay, the strengths and the weaknesses. The strengths is that the algo is market neutral. It doesn't care if price is going up or if it's going down. It'll operate equally efficiently in both markets. It's identifying short-term trend reversals very early on. And so if you're waiting for example, traditional indicators to line up in order for you to decide if you want to buy or you want to sell, well, the algo is doing this very, very early on. Okay, and so it's getting it at the best possible price, typically. Sudden market volatility is gradually absorbed into the model, and it's massaged a little bit using very simple normalization, and this helps sudden data releases that would cause enormous spikes in volatility, in currency strength. It is absorbed and it is massaged just a little bit to help get in at an even better price, because even when you have enormous data discrepancies released into the market, which causes the value of a currency to go higher or lower, continued strength or weakness on behalf of the currency is not sustainable. Okay, it will at some stage revert back. Okay, and using normalization, which is a part of the algorithm, this helps absorb some of these data point releases and get in at a decent price. So that's a very positive part of the algorithm. The weaknesses are that it is vulnerable, obviously, to flash crashes. It's taking on contrarian positions. So if you have another Swiss bank, well, then the robot will get in and continue to get in at ever increasingly attractive prices. Okay, and so if this goes on for 2,000 pips, well, this is a very bad thing. And so this is why that you have to this is why that I've put a time window for the robot to operate. You can tell it how long you want the robot to trade. So it's enabled for a number of hours, and then it's disabled for the rest of the day. Okay, and so it should be monitored. It's not a sit and forget solution, and it requires very good data in order to run properly. Because if you install it and you just flick it on, it'll open a lot of trades, but it's going to be based on rubbish data, because the algo is not going to have enough data because you haven't downloaded the historical data that is required in order for the algo to run efficiently, smoothly, and accurately. So this is very, very important. Okay, the importance of good data. It requires a lot of data from your broker. That's no matter. It's very easy to download good data. And later on in this video, I'll help you understand how you can quickly and effectively download all the data that you need from your broker using the Pipnotic sync charts indicator, which is available in the Discord channel. So you have to use it, you have to download it, and you have to get all the data downloaded efficiently. And if you do this, then you'll find that your results will get much, much better. And then we have the configuration here. It's going to run through the settings, and this is going to be updated along with the updates to the algorithm. But we have the first one, which is the execution. There's a setting called algo execution interval, and this essentially defines the number of seconds between execution cycles, and it's set to about 10 seconds currently. You can set this to a minute or an hour if you only want it to run once an hour, and this will essentially force the algorithm to wait until X number of seconds has passed. And this is just a really nice way to limit the overhead on the computer, which is why I've added it. Okay, then we have the software keys. We have the private key, and this is where you'll put your private key that you were issued at Pipnotic, like you do with the normal software. We have the strength data. So we have enable look back average. When this is set to true, the data, the currency strength data, is normalized using averaging. And this is what I was talking about relating to sudden pushes in strength and weakness of currencies due to data point releases. When this is enabled, this helps kind of massage the data. It helps to limit the impact of the sudden introduction of volatility of market data. Then we have a look back, which is the number of periods of data to use when calculating the currency strengths. And I find that around between 30 and 50 is a pretty good reading. And currently the default setting for the look back is set to 30. We go to the mean. The mean periods, this is the number of periods that is used to calculate the data that is required in the quantitative model, the mathematical model. And it's per default set to 300, but I find that anywhere between 300 and 500, the better. You don't want to go down to 100 because that's not enough data. You don't want to go to 1,000. That's too much data. But you want kind of a moving window of data, a recent data, and I find that keeping it between 300 and 500 is normally pretty good. Then we have the modifier, and the modifier is the value that is used to tell the software where these variance levels, these positive and negative variance levels exist, at what price point, rather not price point, at what data point these signals are initiated and validated. And this is set currently to 2.8, and this I find to be a pretty decent reading for normal uses. I had it down to 2 and it was also working fine, but due to the pretty volatile conditions that we're experiencing at the moment, I find that increasing this just a little bit is a very good idea. We have the time frames, so we have the max period and we have the min period. And so what the software is doing is it's reading all of the symbols that you have in your market watch window. So if you enable everything, then the robot will scan everything that you have available there. It doesn't mean it's going to trade them all. It means that it's going to scan all currency pairs, and it's going to ensure that they are made up of the 9 most traded currencies. So all the major currencies plus the Canadian dollar, Swiss franc, Singapore dollar crosses, just to mention a few. And if it finds a currency pair that is made up of the allowed currencies, it's going to scan all time frames on that symbol and look for entry signals. So the max period is the one that's going to be the biggest one. Then you have the minimum, which is going to be the smallest one. So if you want to trade all 9 time frames, then you can set the maximum to the monthly and you can set the minimum to the 1 minute, and it'll scan 9 time frames on all currency pairs that the 9 most traded currencies make up, which may vary depending on your platform. And so you can see, I mean, that's a lot of trades. And so I would advise you to keep the minimum time frame on the 1 hour and above, and this slows things down as well. If you're in front of your computer and you want a bit of action, you want to see what the robot can do and what it's doing, well then I recommend that you put the minimum down to 1 minute and the maximum up to about 30 minutes, around 30 minutes, and you can use this to watch what the robot is doing on these smaller time frames. But when you have it on such a configuration, I would advise that you stay glued to your computer screen, because some of these trades last seconds, and so you want to make sure that you are there to manage the trade should this be necessary. Then we have the risk, the most important section. We have the lot size. Okay, so when the lot size is greater than 0, then that is a lot size that will be used for position sizing, unless the next parameter, max lot size, is set to a non-zero value. If lot size up here is set to 0.1, so 1 mini lot, and the max lot size is set to a micro lot, well then it's only going to trade micro lots. And so this one here overrules all of the other settings to make sure that if you have a max lot size that you want to stay below, then you simply define that. Then we have balance risk, and this tells the software how much of your account risk that you wish to risk per trade. You can put it on 0.01, which would be 1%, or you can put it on 0.005, which is 0.5%. It's up to you entirely. Then we have stop multiplier and target multiplier. And what these values do, according to the stops and the targets, they are calculated based on volatility for that pair on that time frame. So if you're on the daily chart and you have the stop multiplier set to 3, it's going to look at the daily chart's volatility for that day and X number of days previous. It's going to calculate an average, and it's going to multiply that by 3. Okay, so it's going to be looking at 3 times the average volatility on the daily chart for stops and targets. And this is just an out-of-the-box configuration. You can set this to whatever you like, but I find that on the 1 hour, on the 15-minute and up, it's fine with 3 times. That's a lot of air. That's a lot of buffer to let the currency strength work its way out and start to move towards your target. But on the 1 minute and especially the 1 minute, you might want to increase this a little bit, because also the 5 minute. And this is because if you're holding positions overnight, out of session spreads tend to widen, and so you can easily get spreaded out of a position if your stops are too tight. Then we have pair exposure. Pair exposure is simply telling the software how many trades to open per currency pair, and it's set to 1 per default, so it's going to open 1 trade per currency pair. Then we have currency exposure, and this is looking at the individual currencies, and it's only going to allow 2 per default, 2 trades to be open where the same currency is in both trades. Okay, then we have a stop multiplier, and the stop multiplier is used to help prevent hemorrhaging of money in the situation that we have something like a flash crash. So what it's doing is if a loss is incurred, it's going to, the next time that the same symbol is qualified for an entry, it's going to take the stop loss and it's going to multiply it by the value specified in the stop multiplier to give it a bigger buffer. Because if you have enormous pushes in price, you get stopped out. The next position is going to double the size of the stop, just to allow the position to play out more, to give it a bit of air. Then we have no trading rules, and this is a way to help you limit what symbols you want to filter out. If you don't want to trade the Euro Swiss franc, then you can put the Euro Swiss franc, and if there are two symbols, then you put the symbol name, comma, the next symbol name. And the same applies for the currencies. If there are symbols that you don't want to use, specific, not symbols, but currencies like the US dollar, let's say you don't want to trade the US dollar around elections, well, then you would put the USD, comma, if you don't want to trade the Japanese yen, JPY, and so on and so forth. And I'll show you what this looks like in just a moment. Then we have the filters. If you want to trade take on positions that are swap positive only, then you can set this value to true. You can also specify the minimum swap. So this enables you to define a minimum swap. For example, if you only want to take positions that have no worse than a -1 units of currency per standard lot, then you can define that here. You can also enable the trend, and the trend is based on the histogram data. So if you take an average of the histogram data and that average gives you a positive number, well, it's only going to be buying. If it gives a negative number, it's only going to be selling. And there's another section I added that I'm just going to show you now. Okay, I've added a section that I haven't yet added to this document, which I'll update shortly, which is called trading window. And the trading window is a really nice way to tell the software when and when not to trade. So you can enable or disable weekdays. You can also tell the software to trade from certain certain hours. And this value that you can see here corresponds to your market watch time. Okay, so at 9 o'clock GMT +3, I am allowing the robot to trade for 5 hours. Okay, and when that value is met, then the robot is not able to trade anymore. Okay, recommended configurations. I recommend that you start off with a default configuration in order to get a good baseline. And once you have a sample size of about 50 trades, well, then you can go back, you can review the trades, you can see how things went, what went wrong. Was the stop multiplier too tight? Was it too loose? Was the target multiplier too tight, too loose? Was the mean modifier a little bit too low or a little bit too high? Whatever it may be, and then you can draw conclusions based on, I'd recommend at least 50 trades. Okay. Yes, I say that here, at least 50 trades, a sample size of 50 trades. I would try not to focus too much on the small time frames, and this is because volatility on the smaller time frames can be enormous, especially intraday volatility. But if you want to do it on the smaller time frames, I recommend that you sit in front of your computer and you don't leave the computer until the robot is switched off. Okay, the best times to use it are typically between the close of the American session and the middle or end of the Asian session, or between the sessions. Using this during the day, during London, can be slightly risky because a lot of these daily trends are initiated during sometimes the London session, and so you want to be very, very careful, because you can take on a contrarian position, but the market's not looking to revert to the mean. It's just going to continue to push in the direction of the trend. So you want to do this at times where volume is slightly low and there is a highly likelihood of the trends, or rather price movements are going to be moving up and down, up and down. And this normally happens after the US session has closed and around the Asian session. And send all your questions to the Currency Strength Reversion channel on our Discord channel. All users will be in there. We'll be posting questions and comments and stuff in this channel here, and this will be a really nice way for everyone to help each other and learn from each other. If you send me an email, I'll respond it, but if that was a really good question that many other people could have benefited from, well, then they won't see that. And so I encourage you to put all questions into the Discord channel. And final words, use this on demo accounts, please. If you want to use it on a live account, it's your own risk entirely. I take absolutely no responsibility for you doing that. The robot will tell you on the screen if you are not in a demo account, and it'll warn you of this. Okay, so please pay attention to that. When you're clicking through the time frames, you're clicking through accounts, make sure that EAs are automatically turned off when you change accounts. Number one, because the historical data will not be proper, and number two, it's going to be real money, and so please be very, very careful. And most importantly, I want you to have fun. I want you to learn something. I made this software so that everybody could use it and everyone could learn how currency strength can be used, how it can be harnessed, and I think this is a very, very valuable tool that'll help all of us. It'll help us get into trades very early on. Typically, if you use the histogram and you use the alert functionality, you'll be alerted when certain setups occur. But this is the bridge from being alerted to automation, and this is where this algo trader comes in, where instead of giving you an alert, it's going to open a trade for you. Good. Well, this is going for 21 minutes. I'm going to stop now, and in the next video I will show you what the robot looks like and what it does. Thanks very much for watching.